Hello traders, good day to all of you. Welcome to our today's course. It is in about how to trade using order blocks. So in the previous courses, we have seen about the formation of order blocks. So we already talked about order blocks. We have talked about the different forms of order blocks. We learn about breaker, and also we learn about source, and also we learn about the direction of the overall price action, which is called order flow. So this is all there to help us to learn about institutional trading methodology. So today's session is going to be very interesting because we want to combine all of them and we want to see how we can trade in a profitable manner using all these together. And we are going to learn two different techniques for now about how to trade using order blocks. The first technique is going to be using order block itself only, and second technique is going to be mix of order block and Fibonacci levels. Okay, let's start by the first one. I'm going to give you some theories about both of these methods quickly in the first part of the session, and then in the second part we are going to look at the charts, and of course we will do some practices to show you exactly where to enter the trade, where to put the stop loss, and where to put the take profits. So today it's going to be a nice session because you will learn about how to enter the trade, where to take the profit, and where to take the stop loss. In the first method, we are going to see how this is going to work using the order blocks only. So let me show you one example to explain it in more details. So let's consider a bearish price action first. So here we have the candles going down, pushing down. So the price is going down. And then we will see we have the major price back up. And we have this price action after that previous push down. So this is kind of reverse in price action. And as you know, in such situation, we have the formation of bullish order block. So this is the bullish order block we have here. So in the first method, which I'm talking about now, and I'm focusing on the first method, which is order blocks only, our focus is to see where is the order flow. In this case, as we see this small example, order flow is to the upside. So we focus on buying this market. Okay, so first of all, you have to know in such market, you need to look for buying opportunities. So our focus will be on the buying opportunities. Definitely when you know the order flow is to the upside, definitely before that you need to recognize it using both breaker and source. So considering where is the breaker and where is the source, we can identify the order flow. So then, based on the order flow, which is the upside in this case, we will focus on the buying opportunities. Now, the next thing we need to know here is that first of all, we need to know where to enter the trade, okay, which is the entry. When you have the order block formed, in this case, we have the order block because we can see after the push down, we have the measure up. And if you see, it's broken up above this push down. So in this case, we know that big banks and big financial institutions, they are looking to place buy orders in this order block. So once we see such price action, we want to see the pullback. We want to see the pullback to this order block to enter the trade. So in the method number 1, which is focusing on order blocks only, we can enter the trade in 2 areas. One is exactly once we tested and touched OB in the direction of order flow, and number 2 is at 50% of OB as entry. So let's look at these 2 cases. So number 1 is exactly once it's touching back. So this price action is coming back, touching the order block. So let me show you here. Let's consider we have the bearish move down, and then we will reach to this order block. Touch is enough, okay? Touch is enough. So once it touch, we will enter the trade. Definitely, if it's not going to touch by 1 pip, 2 pip, that is up to you if you want to enter the trade and accept the risk. But as per the rule, we want kind of touch and retest of the order block. So at this point here, we are going to have the entry, and once we are entering trade here, we are putting the stop loss below the swing low and below the order blocks. But definitely don't put the stop loss exactly below, okay? So you need to put it 5 to 10 pips below. So it means we are going to set a stop loss around 10 pips below the order block. So here we have the stop loss. Okay, and then about the target profit, the first target profit, which we are focusing on that only for the in the first method. Just consider we had this price action before, okay? So I'm just giving you a scenario. In the practical example, we can see this better, okay? So when we have such price action, so in this level, we had the previous high, okay? So we use previous the previous swing high as the target profit, okay? So that's all, guys. This is what we want to know using the first method. So here we have another entry point, which is up to you. You can choose the next entry point here in the 50% of order block, means here, okay? So the entry can be here. I will call it entry 2, and I will call the first one as entry 1. So this is kind of methodology to enter the trade using order blocks only, okay? So in this scenario, you have to focus on the entering the trade, and no need, by the way, no need for any confirmation. We don't need any confirmation because this is not our strategy. Remember, when we are going to talk about our strategy, we may tell you some form of confirmation which you can take or you cannot take. It's up to you. But this is just a pure price action, and we want to know how to trade using order blocks. That's it. So in such scenario, when we have the price pushing down, coming back up, we have the order block here, and when it is coming back down, we can enter the trade at the retest or touch of the order block, because when we have the order block, it's kind of confirmation itself. So we will accept the risk and we will put the stop loss below. Okay? So if you do this using your own strategy, even you will get a good risk to reward, and you can make advantage of it to take profit, because just imagine this is coming down, entry 1, entry 2. So try this example in 100 trades or 20 trades in a row, and you will see after 20 trades in a row how many of them are going to profit and how many of them are going to stop loss. And it will be proved to you that using order block is going to work. Especially, I emphasize on that, especially in the higher time frame. But I mean, if we consider this chart as H4 or daily, then in that case, the probability of hitting the target profit will be maximized. Of course, if this is going to be your 15-minute chart or 1-hour chart, the probability of hitting target profit can be reduced as well. So this is up to you. Which time frame do you want to trade? But of course, you can rely on this method using a small time frame, and you can test it, back test it by yourself to see how profitable it can be when doing 20 trades in a row. In this course, we are here just to focus and learn about the method, okay? So in practice, you can apply this method in 20 trades in a row to see how many of them in different time frames, how many of them are going to hit target profit and how many of them are going to hit the stop loss. Of course, you can conclude this is going to be a profitable method in which time frame and how it is going to work for you. So let's go to the second one. Second one, we want to talk about mix of Fibonacci order block and Fibonacci levels. For this one, of course, I prefer to show you the chart because it's much easier to explain the chart for the Fibonacci level. But before going to the chart, I'm going to show you some example in the theory. First of all, you need to know we have a standard Fibonacci level which is made by ourselves. I mean, it's not something that you can find everywhere. This is something special which I want to share with you. And I want to inform you about these Fibonacci levels. So you can take a screenshot or take a note of that. So we have these Fibonacci levels which you need to know. 38.2%, 50%, 61.8%, 78.6%, and minus 23.6, sorry for that. So minus 61.8, 23.6, 38.2, 50%, 61.8, and 78.6. So we are using this tool for target profits, and also sorry, one it's missing here, which is 0%. Okay, so these three levels, minus 61, actually 0%, we use it as TP1, we use this one as TP2, and we use the 61.8, so 0% as TP1, minus 23.6 as TP2, and minus 61.8 as TP3. And for the retracement, so we use retrace number 1, and so on. Retrace number 2, retrace number 3, and retrace number 4. So we have the 38.2 as first retracement, 50% retrace number 2, and 61.8 retrace number 3, and 78.6 as retrace number 4. And one more thing which you need to know, here for these two levels, 61.8 and 78.6, between the 61.8 and 78.6, we call this as OTE, which stands for optimal entry. Okay, so OTE, which stands for optimal entry, is actually starting from 61.8 up to 78.6. So somewhere between these two, you can find the optimal entry. This is just for the theory, so please take a screenshot, or you want to write it down by yourself, feel free to do that, because these are the important levels. These are the Fibonacci levels exclusive for us or some others, but it's not a general information. So just take a note of that, and we can then discuss it in the charts. Okay, so I'm going to so in the same example, the first example that we had here, imagine we have to know this order block, where it is. So I'm going to remove this entry 2, this stuff, and even target profits and stop loss. And I'm going to add some more to these, as a bullish price action, for example, is coming up, and then this is going to pull back, right? So this is going to pull back. When it is pulling back down, this can come back down to different Fibonacci levels, okay? So we have the order block, and we have these Fibonacci levels, which we will consider it, this Fibonacci from here to here. Okay. Then the retracement levels will be 38.2%, 50%, 61.8%, and 78.6%. Okay, so when you enter you can see the retracement, and in each retracement you can look for a buying setup. Okay, in case you are getting the lower time frame confirmation as order block, you can enter the trade, and also you can choose the optimal entry. Optimal entry means to wait for this level, okay, somewhere between 61.8 to 78.6. So it means when we have some bearish price action, it's coming down, okay, when we reach to this level, which is OTE, and then when we see a bullish engulfing as confirmation, then this means you can have your entry here, and again you can have your stop loss below the order block. You have two options. I'll show you. For a stop loss, in this case, you have two options. Either to put it below the order block or to put it below the previous low. Okay. And for the target profit, as I just explained to you, you can have it as 3 target profit. The first target profit, is going to be at 0 level, which is the high, right? So I consider this level at 0%, which is TP1, and then let me just remove this stuff. So here you can have minus 23.6% as target profit number 2, and minus 61.8% as target profit number 3. And definitely, if this trade is going to come up, it can reach to your first TP, second TP, and third TP when if you have a very good setup. So then you can see such setup. Okay, so guys, in summary, we learn how to trade using order blocks. First of all, I show you how to rely on the entry using the order blocks only. And in the second method, I'll show you how to enter the trade, set a stop loss, and set target profits using order blocks and retracement level using the Fibonacci. And we also set the target profits using the Fibonacci levels as well. Definitely, you can do the practice by yourself and see how this is going to work for you. And you don't need to necessarily have 3 target profits. If you really want to make money and you are not wishing for long-term trades, then you can just use the target profit number 1, and this is actually more achievable. And most of the time, when we see such confirmation setup and we see the optimal entry, as I told you, here we had the OTE. I want you to learn this term. This is a standing for optimal entry. So OTE is at this area. So once we get the OTE, then after forming such setup, we can achieve the target profit 1. And then when we are going to teach you in the next courses about the trade management, definitely we can push the stop loss above to reduce the risk and have a free risk trade. So in that case, you can just watch the trade and see how it's going to hit target profit number 2 as well as target profit number 3. So that's all about how to trade using order blocks. Let's have a quick break, and then we will continue using the practical session and answering your questions. Thank you very much. Have a nice day. Bye-bye.